NALCO is joining us on the show to talk about the pricing outlook for aluminum and some expansion plans that they have. Joining us is the chairman and MD, Mr. T.K. Chand, and Nikki Mirchandani from our research desk, Johnson, to take the conversation forward. Nikki, over to you.
Thank you, Neeraj, for that. Commodity prices have been on a boil, or rather in traction, after the US president imposed some kind of tariffs, and also after the production winter cuts happened. Hello and welcome to Bloomberg Quint, sir. Mr. Chand, the first question that I have for you is aluminum prices have corrected 7% YTD to around $2,000 million ton as the winter production cuts have disappointed, as in only 0.9 million tons of aluminum capacity has been restrained as compared to what we were anticipating to a number of around 2 million ton. I'd like to understand what is the outlook of these prices going forward and the bearings that it would have on the financials of the company.
If you look at the market, the aluminum prices are now being driven more by sentiment of arising out of this US trade action rather than market fundamentals, because as far as consumption and supply is concerned, around 15 to 16 million ton per quarter it is getting produced and consumed. In first quarter, market was little surplus, but in the second quarter it is predicted to be little in short supply, maybe around 5 to 6 lakh ton there will be short supply in the market. And demand also, if you look at Southeast Asia, the GDP growth is quite strong, and Malaysia, Thailand, India, elections are around the corner in the next 1 month or 1 year, and so there will be a lot of spending in the infrastructure, and also there is picking up in China and construction industry in Europe and America also. Automobile industry is doing well. So all of our demand pickup is there, and it is estimated that around 4 to 5% increase in the demand will be there. So there should not be any reason why the aluminum prices are taking a bearish outlook. Maybe it is more driven by the sentiment of USA trade action. But nevertheless, in the coming days, I expect that aluminum prices will not take much of the dive down, and it will start having a upbeat. And we expect that prices will be moving somewhere around 1950 to 2050. Within this band of $100 it will move.
Sure. Even as the aluminum prices have been correcting, alumina prices, which are the key raw material prices, have actually gone ahead and they've risen by 19% on YTD basis. They stand roughly around $407 per MT. This is after authority has put a 50% output cut at the unit due to environmental clearance. I'd like to understand the outlook of alumina going forward, and also would that benefit the company?
A rough estimate, every $10 increase, we gain a benefit in the EBITDA by 85 crores of rupees. So increase in alumina prices will have a significant impact on the EBITDA of the company, and from that angle, the current spike in the prices will have a better impact as far as financials of NALCO is concerned, because we sell around 1.3 million ton of alumina in the market.
Sure. Talking about the trade-off between aluminium and alumina prices, are we expecting some kind of moderation going forward in realizations of these two commodities in the Q4 and FY19?
As far as NALCO, we have two revenue segments. One is alumina and another is aluminium. In alumina, increase of prices are there, and there will be a definite positive impact on EBITDA and the realization of alumina. In fact, realization of alumina has increased around 20 to 22%. But in case of aluminium, since the prices are going down and cost push factor is also there, input costs have increased, there is a quite moderation in aluminium realization. But overall, both alumina and aluminum together, if we take the realization and the benefit to the company, would be definitely positive, because we have NALCO has a strong alumina arm which offsets in any kind of downward trend in the aluminum.
Sure, Mr. Chand. You just mentioned that we're looking at a 22% growth in terms of realization for your alumina in Q4. What is the growth figure that we can look at for aluminium realization for the next quarter?
As far as aluminium is concerned, as you know that prices are now moderating and are in the downward trend. So the realization, nevertheless, compared to the last year 17-18, in 18-19, if this moderation does not go further below, then we'll be at the same level. In case there will be an upbeat because of the market conditions, then the realization may be little better. Otherwise, we expect that realization in aluminium will be at the same level because we have taken some cost-cutting measures like reduction in specific energy consumption, which energy is almost 30% of the cost of production of aluminium. That will give the advantage, and whatever moderation in the market is taking place, that will be getting adjusted with the reduction in the energy cost.
Sure, Mr. Chand. Also, I'd like to talk a little bit about your EBITDA margin, given the cost push pressures that we're seeing right now in this quarter, along with lower realization. Where do you see your margins moderating, or for that matter, sustaining for the next quarter or next financial year?
EBITDA margin almost 50% remains with aluminium and 50% remains with alumina. So alumina increase in its prices is offsetting the whatever moderation is taking place in aluminium. So therefore, we expect that in Q4, the EBITDA which we will be getting, there will be some moderation, but not much, because alumina prices are on a rise. And in FY19, we are expecting that if the alumina prices increases and aluminum prices does not go much of the moderation, then EBITDA will have a bright chance of improvement.
All right, this one is going to be an important one since it talks about your Capex. A lot of Capex expansion plans have been going on with the company, be it in likes of smelter, alumina, refinery. I'd like to understand what is the Capex that the company has earmarked in this financial year, FY 2019, as well as for the next financial year.
This year, we are reaching a Capex expenditure of around 1,090 crores. And FY19, we have kept a target of around 1,100 crores, but probably we'll be doing little more than that. And for FY20, the Capex plan will be somewhere around 1,600 to 1,700 crores, because the major refinery work will start from this year onwards, and next year it will be more. And then by FY21, it will be the final commissioning of the thing, so the balance expenditure will be done. So the next 2 to 3 years, the Capex expenditure will be quite robust, because on account of the refinery work, and by that time again smelter work will come and captive power plant will be coming. So that will again take the Capex plan forward.
And so how do you plan to fund this Capex? Would that be through internal accruals?
Right now, we have zero debt. Funding of this refinery will be entirely from our internal surplus cash, which we are having. And but for the smelter and for the power plant, we will be definitely borrowing. And right now, for our joint venture caustic soda plant, which we are putting up in Gujarat, Dahej, along with Gujarat Alkali, which is a Gujarat government-sponsored company. There we are making a debt-equity ratio of 70-30. But refinery expenditure will all be made from our internal sources.
Sure, Mr. Chand, it was a great pleasure talking to you as always. There was the management of the company pretty much buoyant about the Capex plan and also sustaining the EBITDA margin going forward in the next quarter.